Howdy, folks. We are live. We are back. It occurs to me that in the week or two that I've been doing this, I never once introduced myself. I do apologize for that. Hi, I'm Pepper. This is Godly Trading. There's the logo. And this is my live trading room. So this is basically just me doing my own trading every single day, live on camera. I was sort of inspired to do this by my friend Isaac, who has his own live trading room in the mornings where he does his, I believe he does intraday futures trading. But anyway, so as is our normal procedure, let us start today with our verse of the day. I was looking at this when I was reading today's Proverbs of the day. Verse 25 here says that anxiety in the heart of a man causes depression, but a good word makes it glad. And it reminds me that all too often trading can cause all manner of negative emotions, from fear, greed, but amongst the worst ones are you just start to worry over the worry over trading can tend to take over your life. Clearly need my producer in here as for the comments, but trading is just an activity. It's not an identity. It's just something we do. Someone was asking me the other day about a prop firm. Somebody was asking me about AI, and I have the same answer for both of those. They're just a tool. A prop firm is just a tool. AI in your trading, it's just a tool, just a hammer is all it is. So keep things in perspective. Make sure you keep trading in its place. So, hey, Travis is over here in Instagram. Man, I wish there was a way I could put my Instagram comments up here on StreamYard, but I don't know how to do that. So with that, let's dive into our normal routine. Look at the economic calendar first. Today, this is why I warned you about some of these news events. So today, for instance, if you trade the pound, the GDP year over year for them was not at all what they were expecting. So for you day traders out there, if you're day trading Forex, be careful. Tomorrow morning, U.S. has CPI at, I think it's usually 7:30 in the morning Central. So be aware of that as you're trading intraday in the morning. One of the things I wanted to talk about today was my options strategy. Last night, we had in our midweek, our Wednesday night group. Yes, perspective is the key, Travis. We had in our Wednesday night group my brother Pierre, who is my go-to guy on options. He was teaching us last night all about options. Here's our here's my. This is a really poor way of showing this. Sorry about that, Pierre. But here was our Wednesday night options class with Pierre, my brother. One of us is adopted. He was showing his strategies, and so today I'm going to show you my one and only option strategy that I have. But first, let's go through our regular routine. So let's jump back over into here and start off with Bob. Actually, we're going to start off with Forrest, the automated gold robot who did nothing. This was what happened during the overnight period with Forrest, and nothing happened, so nothing happened. Looking at Bob's having a rough go of it, to be honest. By the way, you can look and see yesterday we did not get into this trade because of this demand zone down here. Let me extend that puppy out. And you can see the price came down and bounced off of it. Not that I'm expecting price to bounce there. I'm just expecting price to react there. This is the reason I did not take this trade short right here, because I did not have clear skies. Now, could price just continue to drift down through this? Absolutely, it could. Trading is all about probabilities, not guarantees. There's a higher than 0% probability that price is going to struggle to punch through here. And as a result, I'm not taking a trade that I have to sit there and suffer through and sweat it out just to get to my first take profit. I don't want that. I want clear skies, clear sailing. If our Navy man's in the room, I want clear seas ahead of me. Just quick run through. We've got Euro Pound is the only trade we have open right now, and it's just been struggling to punch up through this area right here. You can see all these wicks above it. I mean, clearly this is a spot. There wasn't a weekly overhead supply zone, but there's clearly probably a daily overhead supply zone that it's struggling to get up through. Matter of fact, let's just pop that on the screen and see what it looks like. And look at that, boom, look what I tell you. So here, this is the reason why this trade is struggling. And I should probably show you guys the supply and demand strategy that I don't trade, only because I've got enough going on right now. But I do use supply and demand as a way of preparing myself for the emotional ride that I'm taking. So anyway, this is why price is struggling to get past my my entry level here. Did I take that into consideration when I entered the trade? No, because this is a daily zone, not a weekly zone. I only care about weekly zones. Every time you go up in a time frame, the zones get stronger. And if I'm on a daily time frame, I care about what's the strongest, which is going to be the weekly. Well, technically the monthly, but who trades that? So running through real quick, look at Aussie Yen, nothing to do there. Aussie Kiwi, this is our tracking trade. And right now our trailing stop, I haven't put it on here because I'm just tracking this trade because I missed it. We talked about the fact that I missed this trade way back here. Our trailing stop is going to be somewhere right around here. So nothing to do. Aussie US, nothing to do. Swiss Yen, nothing to do. Almost something to do. If price were to close below here, we'd have a short. But we don't yet have a short because price is still in no man's land. Euro pound, nothing to do. Euro yen, nothing to. Okay, here we go. Euro yen. So here's the setup for Bob. We've closed below my baseline, which says start looking to go short. I come down here. My main confirmation indicator hasn't yet told me to go short. So I'll wait. So the next day, I finally have permission to go short, permission to go short. I can go short. So the next step is, has price already moved too far? And I define too far as, has it already moved past this white line? That white line is just one ATR. That's all it is. Whatever the ATR is that day, it's, this minus that. That's where it is. The answer is yes. So, well, actually the second step for a brand new trend is volume. But we have plenty of volume. So now what I need is, in order to enter this trade, I leave myself a note there. I've got to have a pullback. So tomorrow it needs to have pulled back. Then I can enter the trade. I got one candle to do that. But for now, nothing to do. Moving on. Pound Aussie, nothing to do. Pound Swiss, nothing to do here. Pound Yen, we talked about that. There was nothing to do, and there still is nothing to do. Kiwi Swiss, Kiwi Yen. I feel like I'm missing something. Wasn't I on a pair that I was looking to Pound Aussie, Pound Swiss? I feel like there was it was Euro Yen. Oh, we talked about it before. Okay. Guys, I'm 51 years old at this point. And I forget things. So Bob is done. This is the strategy I've been trading for 4 years now. I've been on DarwinX for almost 2 years. 2 years is April. I was trading it for about 2 years over on the Fivers prop firm. And then the great MT5 purge came and we all got kicked out. All of us Americans got kicked out. So I had to switch over to Darwin. I love DarwinX as a prop firm. Anyhow, done there. Let's jump into Frank and take a look at what's going on with Frank. Right now, I've got 1, 2, 3, 4, 5, 6, 7, 8 open trades. Well, I could see that number right there, and it shows me I've got 8 open trades with Frank. We're negative on open equity for the first time in about a week. So I've just been hovering around this halfway, from 2/3 of the way point. Remember, I've got to get to $800 to pass this prop firm challenge. And, right now, everything's just sort of going sideways. Nothing really to do what any is. But let's take a look just in case. So we're going to go to Frank, and we're going to cycle through our existing trades. You can see the oil trade here. We're down. And this is what happens. This is what I love. We're talking tomorrow in the video of the week on the YouTube channel about God's patterns. And there is an ebb and flow to everything in trading, not only in trading, but in your portfolio. One of the things I do, and I've got a spreadsheet I can show you guys sometime where I do this, I actually graph my return. And have you ever had a situation where you tried something new? You was working well over here, so you tried something. Maybe you signed up for a new prop firm account. Maybe you started a new market, whatever it was. You were working. It was working over here, and the minute you tried to step out and expand and do whatever, it starts to fail. Well, there's a biblical reason for that, but there's also just a timing reason. As your equity goes up and down, hang on, I need to gesture so that you can see me. As your equity curve goes up and down, think about it. When are you going to be the most confident? When you're at your peak, when you're just killing it. Well, that's when you say, okay, everything's working great. Let me step out and add a new thing. Well, what's on the horizon? If you're at your peak, a trough is on the horizon. So there's a natural curve. So what I do is I put my own return equity graph on a chart, and I actually put that same like standard deviation above and below it. So I know when I get too far away from the midline, okay, Pepper, prepare for a downturn. Remember, guys, I told you yesterday that my system seems to work best in the first 7, 8, 9 days of the month. And then it takes a downturn. And then towards the end of the month, it perks back up again. It is playing out right now in Frank. I was up in open equity like $150. Again, this is a small account. So $10,000, I'm risking 0.5% per trade. And now today I'm down $30. Nothing's closed. Nothing's changed. It's just a natural ebb and flow. You have to understand that. Prepare for that. Part of being a disciplined trader is keeping it in perspective, taking everything in stride. Yes, I'm up. Now I'm down. It's okay. Everything is still going according to plan. Like Proverbs says, if you dwell on it too much, anxiety in the heart of a man causes depression. But a good word makes it glad. So the good word for today is just keep trading your plan. So as we cycle through, you can see Aussie CAD has just pulled back a little bit. Aussie Swiss, we were 3/4, almost 80% of the way to our first take profit. And now we've pulled back almost to the entry. You can cry about it, or you can just, hey, this is just what trading is. Swing trading especially. Look, we were about 3/4 of the way and we pulled back. Euro Kiwi. We're actually gone negative on Euro Kiwi. Kiwi CAD, we're struggling to get back up to our entry. Kiwi Swiss, we're negative. Yeah, Kiwi US, we were halfway, and now we've pulled back to our entry. It just happens. There's nothing to do here other than just hang on. Just keep going. Real quick, I'm going to cycle through. This is going to be very quick. Remember what I'm looking for? I'm looking for those red and green arrows under today's candle. So I'm just going to cycle through all of the pairs that I trade. By the way, this one is going to nope, I'll show you the one I was talking about that I had to go ahead and delete. I'm just cycling through all the pairs to see if anything has a new signal for today. Doesn't look like missed that one completely. Let's see, where are pound pairs and Kiwi pairs. By the way, with this particular strategy, if you have a signal while your trade is open, it's up to you to decide what to do with that. Could you add to it at that point? Yeah, you could. Test it. See what that does for you, and then make it part of your system. I don't. Doesn't mean you can't. Don't be so pure. Don't be a Pharisee about these things. This isn't the law. Everybody trades this basic same system and just variations of it. This is a variation of the guy who invented this. I say invented. The YouTube video I saw that was highlighting the system, I've changed it to fit me. Take this and change it to fit you. Cycling through, and I'm not seeing down to the U.S. pairs and nothing. So no new trades on on Frank. Looking over to Forest, we are in just two pairs right now, and we pulled back a little bit. Euro, US, and CAD Swiss. Let's look at Forest, and Euro US is here, and we pulled back a little bit. CAD Swiss. Oh, CAD Swiss is a little bit further than it was yesterday, so that's doing well. Thank you, Travis. I appreciate that. So that was a very oh, by the way, I do need to show you. Today I spent some time and adjusted these. Remember, I told you that one of the things I like about Forest is I don't have to look at it every day. This is the swingiest of swing trading. That sounded terrible. This is the longest term of this, the least amount of time of all my swing trading. So I basically place a pending order and give it a couple of days for this moving average to either hit it or not hit it, and price the trigger or not. And then I'll come back and make an adjustment. As this moving average moves down, and my entry is at the moving average, every day it moves, as the name would imply. So every few days, I've got to adjust it down. And I did that today. So I adjusted that one, and pretty much every one of these I adjusted. Now, eventually, like here on Pound Aussie, Eventually, as price starts to move back up towards your entry, you're not going to have to adjust it because it's moving average start to flatten out. US Swiss, this is a new one I added today, just based on the fact that we didn't get the signal here. There was the US CAD that we missed completely. We missed this thing by like 3 pips, our entry. And we wouldn't have gotten out, but we would be better off. That also happens. This is why I tell people there's basic logic in even the numbers that you enter at, whether it's futures or stocks or Forex. One of the things I like to do is say, where's my entry area? So right now, I want to get in at the 30. Well, the 30 is at 1.36812. Well, I'm not going to do that. I'm going to get it at 1.3685 or 1.3680. These whole numbers and half numbers are areas where people who don't look at charts place their trades. So I give up a little bit of that perfect entry to make sure that I can get in. We talked about the analogy with catching one of the 4 cables on an aircraft carrier, whatever they're called. So that's it on Forest. Now, let me talk to you about options. I am not my brother Pierre. Pierre is the master of options, but I do have one options strategy. I'm going to show you my E-Trade account. I need to break my options out in their own account, but right now I trade options inside of my my income investment ETF account. So this is my $6,000 account. It's at $5,400 right now. And this is here just to generate income. It's $5,000, $5,500, and it generates about $300 a month in dividend income. It just spits the money out at me on repeat. Love that. But I do keep one amount of money in there that I use for selling this particular strategy. Now, my favorite way to trade options is with selling options. I like the income aspect of options. So when it comes to options, you've got 2 different ways to utilize options. Think about the real estate market, right? Most of the time when we say I'm gonna get into real estate, you think about the fix and flip shows you see on HGTV. I'm gonna buy a house, I'm gonna fix it up, and I'm gonna sell it. Like buying a car and fixing it up and selling it. That's the standard way, right? That is buying Acme at 100 and selling it at 110. Capital appreciation. The other side of real estate is I'm going to buy a duplex and rent it out. That's what selling options gives you. Constant income, less income, but stable long-term. That's what I do with, this is called the wheel. And it is my favorite strategy because it is the easiest strategy to do. So here's 3 steps to the wheel. Step 1, you pick a stock you wouldn't mind owning anyway. I have picked Plug just because of account size, right? It's only a $5,000 account. I can't afford some of the higher priced options. Plug is at $2. Plug's got plenty of volume. You pick a lower price stock to sell options on. Sometimes you run the risk of low volume. But I mean, hey, you get Ford for like $7, $8, $9 depending on the time of year. So there's nothing wrong with an under $10 stock. So I picked Plug is a manufacturer of hydrogen fuel cells. I picked Plug. So now the next thing is, okay, I picked a stock I wouldn't mind owning. Step number 2, find a price you wouldn't mind owning it at. For me, I use my supply and demand tool. Hey, what's a good spot around here? Well, somewhere in the $1.60 to $2 range is a good spot. You can see prices just bouncing off of these. Right. All right. Sell options. Sell a put option there. Keep doing it over, collect the premium. Keep doing it over and over and over again until you get assigned. So what does that mean? Well, right now I have sold 5 put options at $2, and I've sold the March 13th, meaning at the end of the day on March 13th, this contract expires, and if price is above $2, I just keep the $82 I collected on that and do it again next month and next month and then until price eventually closes below my strike price, the price I sold it at. If that's the case, then I am now the owner of, in this case, 500 shares of Plug at $2 a share. So that's step 2 completed. So now what do? Now you turn right around and you sell calls against that stock at a price you wouldn't mind getting out at. So let's say, for the sake of argument, that today is the day that it expires, and I am now the owner of 500 shares of Plug at $1.82. I'm still paying $2, but it's currently only worth $1.82. Fine. I turn right around and I sell calls on this thing up at $3. And I keep doing it over and over and over again, collecting monthly premium until the price of Plug gets up to $3 and they get called away. I sell them. So now I actually sell my $2 shares for $3. So what does this look in real terms? Well, let's go to trading and options. And let's just look at Plug. So what I would do is what I did the other day. I try to do this once a month. This is my 1 hour a month strategy. Actually, it's more like half an hour a month. So I've got a strategy that takes me 15 minutes a day. I've got a strategy that takes me 0 minutes a day. That's my manual trading. My automated trading takes me 0 minutes a day. I mentioned my buddy Brian trades every single Monday night for an hour, once a week. This is a strategy that I use once a month for about 30 minutes. So first thing to do, I like to sell monthly options. So what's today's date? Today's the 12th. So let me go out. Well, it's February 13th is the option expiring tomorrow. So let me go to March the 13th. All right. I want to sell the $2 options. Well, right now the $2 options are 29 cents per option contract. So if I'm going to sell 5 of those, then I would collect, let me pull up the calculator so I can do this correct for you. Hang on. Calculator. So I would sell, I want to do about $1,000. So I sell 5 options and at the $2 strike price. And each option is the equivalent of 100 shares times 100. So it's $1,000, right? So that's how much money is being tied up. I'm going to get to that in just a second. Wow, this came from my brother Pierre, this whole idea. Anyway, I'm getting $29 29 cents times 100 times 5. So I'll be getting $145 for this particular options contract that I collect, right? I'm selling it to somebody else. They're paying me $145 and I keep it. And let's say that at the end of the month, the price of Plug is above $2. This expires worthless on their end. So I've made $145 and it cost me $1,000 of tying up my money. It actually didn't cost me anything, right? I didn't pay anything. So that is 14% return, cash on cash. All right, I'm taking $1,000 and I'm making 14% a month. Times 12. That's 174% a year. That's a lot. So the reason that this is beautiful is this account, as you trade options, it comes with leverage. And you can see here on this particular account, I've got a margin of $1,700. I'm tying up $1,000 worth of buying power. And if the option never gets, guys, I have been not sharing my screen this entire time. I am so sorry. I do that so often. This is why I've got to have a producer, or my producer's at home right now. Anyway, March 13th option, $2 strike price, 29 cents per contract times 100 times 5 is $129. So that's how I got to here. So what this does, though, is it's tying up my margin. So I'm basically, think of it like, what's the thing called that a line of credit. Think of it like a line of credit. You're like, all right, I'm going to use a line of credit as collateral for this contract over here. Well, the contract expired worthless, so I never had to use it. So I had the ability to borrow this money from, and I know this sounds like, hey, this sounds like it's kind of shady. E-Trade has given me margin to use. They want me to use it because they're going to charge me interest on the money that I borrow from them. So that's what margin is. But I'm not actually borrowing it. I'm just tying it up. I'm encumbering that $1,000 for a month. And if the option expires worthless, I get to use $1,000 of someone else's money as collateral to sell this options contract. And I make $149 off of $0. So it's kind of an infinite return. My buddy Pierre my brother, had pointed this out to me. Said, hey, you can just use your margin for this. Now, sure, you can't go crazy on this. Then you would actually use up all your margin. But as another element to add to your overall portfolio, so I make 2% on Bob. I make 3% on Frank. I make 1% over here, or 14% on, this is cash on cash return, right? So I made 14% on $1,000. You start adding these together, and suddenly you can see when I mentioned the end of the line for you as a trader is not to be the world's best button clicker. It's to be the manager of your own trading company. And all of your strategies and all of your different accounts are your employees. Hey, what's Bob doing today? Hey, what's Frank doing today? What's Wheel doing today? By the way, there's actually, I'm going to have to give it a name. There's actually a cartoon from the 70s called Wheelie and the Choppers. So I'm going to have to actually give him a little figurehead. But anyway, so you get 4 or 5 different strategies that you're employing, and none of them are taking you more than 10, 15, 20 minutes a day. So you get 5, 6, 7% a month on 30 minutes a day. Why? Yes. Can you make 30% a month? Well, not 30% a month. Can you make 10% a month as a day trader? Yes, you can. Is that going to require you to sit in front of your computer for 4 hours? Yes, it will. Can I make 5%, 4% a month and sit in front of my computer for half an hour? Yep. And if I can, why wouldn't I? Because people say, well, 5% is not enough. To which I always reply, okay, 5% of what? Think about it. Which would you rather have? Would you rather have 100% of my bank account or 1% of Elon Musk's bank account, right? Which would you rather have, 100% or 1%? Well, depends what we're talking about, right? I'd rather have 1% of Elon Musk's bank account than 100% of my own. So if 5% doesn't sound like it's enough for you, just ask the question, 5% of what? And if your system is working and it's just spitting money out at you consistently, then all you need to increase your bottom line is to increase the size of the account. That's where prop firms come into it. We're going to talk about prop firms next week in our group mastermind. So anyway, I did want to talk to you about the wheel strategy. I love it. It takes me 30 minutes a month. Go out there and find you that one stock and just keep selling options on it month after month after month. And if you do finally wind up owning shares of it, continue to sell stock. I mean, that's why it's called the wheel. You sell puts until down here until you get assigned, and you turn around and you sell calls up here until your shares get called away, and you turn around and sell puts again, and you sell calls, and you sell puts. It's just round and round and round, just a money machine. It is one of the most dead simple money generating strategies out there. Just everyone should be doing this. Add the wheel to your strategy, to your overall portfolio. I have rambled on, and it is 3:59. It is time for us to get out of here, guys. Thank you all for being here. I will see you tomorrow.